Hey folks, and welcome to the Pipnotic Symposium for the 4th of July, Independence Day, 2020. We just got back from our trip from Bali to Denmark. We'll be here for about 3 to 4 weeks, and then we will be moving on to Spain. The trip was really good. It was really long. I think door to door we were about 32 hours or something. We had a pretty extensive layover in Doha for 5 hours, which is a blow, but that's the way it goes when Corona times are influencing just about everything. But it was good. Now we're here, and all our baggage is here, and we're kind of like quite sad about leaving Bali. Very, very sad, actually. Yes, so now it's just time to get climatized back to the European way of living. Denmark here, it's freezing cold and raining. It's it's a very different life in, I think, Northern Europe, in contrast to life in Bali, where you're outdoors all the time and the sun's shining all the time. And here, I suppose in most parts of Europe, you're just inside a lot more, and you kind of shield yourself from nature with walls and windows, stuff that we didn't really have in Bali at all. We kind of just lived outside. We just needed something over our head to keep the rain off, but otherwise, you're outside all the time. And so I can feel that I really miss that. But it's cool, new adventure. We'll see what happens. Right, today we're going to talk about a request that Mitch had, and this is going to be applying the currency strength to supply and demand. So I'm just going to have a quick look at the settings of the histogram, and then we'll kind of talk about how we can apply. But I think it's important that we focus on how the software is configured before we do much else. So having a look here, I mean, you can, the default settings are fine. And I just leave this on here for a second so you can have a look. You can also pause the video to have a closer look. But the mean period is 500. You can swap this to anywhere between 300 and 500 is fine. 500 is just using a lot more data, and so it's going to ensure that we include kind of extreme deviations from the mean in currency strength, so like very big positive and negative variance. And it's going to kind of mesh all this nice data together. So you're getting you're getting a much wider perspective of data when you increase this number. And I wouldn't put it too big, but 300 to 500 is generally a pretty good idea. Then you have the modifier, which is 2. If you keep this at 2 or above, I think you're in good shape. If you have this above like 2.5, 3, then you'll be getting signals are much less. And so around 2 is normally okay. And that's pretty much it. I mean, the average is set to true. This is just normalizing data, because sometimes the data that you get from MT4 brokers is kind of crappy. And when you set this to true, you're kind of normalizing it a little bit. And it's just filtering out it's not filtering out, it's just massaging kind of bad data that we're getting from the brokers. And that's happening quite a lot with MT4 brokers. So setting that to true helps kind of alleviate the pain of kind of dirty data that we're provided with from the broker. So if you leave it on that, and we just click this to OK, and the histogram will jump a little bit, and then it'll look something similar to this. This data is not perfect. I haven't had my computer on for quite a few days now because we've been packing and moving, but it looks something like this. Okay, right. So if you look at this, I mean, what's going on? Well, the software, the histogram, it's an awesome tool, and it's a tool that's I started developing a long time ago, many years ago, and so it's tried, it's been really exposed to the test of time. The data that it's showing is very profound, but it's very important, of course, that you have historical data available on your MT4 platform. Otherwise, as the saying goes, garbage in, garbage out. So it's very important that you download all the historical data. And if you haven't done this, or you're perhaps a little bit confused as to how to do it, go back to when you signed up, you received an email, and there was a link to the welcome page at Pipnotic. Just go onto that page and have a look at the histogram video. This is the page. Okay, so if you scroll down here, there's an introduction video. We have installing the indicators. This is a very important video to watch, so I encourage you to watch it. And then we have the currency strength histogram. And this video here will explain how to ensure that you have the historical data that the software needs in order to present these visual signals to you. And then you can do this two different ways. You can use the history center, which I don't do because I don't think it works very well. Or you can do the manual way, which is the way that I show in this tutorial. And it's just a really good way to force the platform to download historical data. I'm trying to figure out a way to kind of attach some kind of an indicator onto the chart that's constantly downloading data, changing time frames for all time frames, so you can have it running on the corner of a chart, just so it's always making sure that we have nice fresh data. But I'll figure that out once we get settled. But this is an important video, so if you haven't seen the video, I encourage you to watch that. That's video number 3 on the welcome page. So have a look at that if you haven't already done so. And so, as you can see here, we're presented with data. Okay, so we have the histogram running below, we have the price chart above here, and you can see that the software is drawing these rectangles. Of course, these rectangles are color-coded. And again, if you're not familiar with what these colors mean, then I suggest that you go back and you have a look again at this video here. Sorry, here the supply and demand video. This one explains what all of these colors mean. Okay, and the video talks about a version of the software that has a setting that is currently not available, and that is this one here, the show consume supply and demand. This is missing in your platform. This is because there was something wrong with the functionality that I wanted to fix. So that's fixed, and I'm going to issue an update. I just didn't want to do it before we moved, just in case there were additional bug reports that I had to deal with when I was in transit. But this will be added very, very soon. It was present, it was removed, and I'm going to reintroduce it here in a few days. So you can look forward to that. But it looks like this. Everything's color coded as mentioned. We have blue, which represents the 4-hour. We have the red, which represents daily data, and then we have the orange, which represents weekly data. And this is all relative to the time frame that you're looking at. So if we click on the daily chart, you'll notice here that we no longer have blue rectangles, but we have purple, which is monthly, red, which is daily, and orange, which is weekly. Okay, so it's all relative. So you have this software running. Okay, you have the software running. Let's have a look here in the 4-hour chart and move out. And you'll notice here that if I just show you just a really good way to use the software, change the time frame a couple of times. You'll notice here that, price formed this lovely area of supply. This is a nice area of supply because we formed this low. When price left this low, we managed to consume the supply, which was respected. This was a very important level because it was tested once, twice, 3 times. This area distributed, and we cut through it. So we removed through, we ate that plate of pancakes below price here. We traded below, and then we moved above. So this is important. This has been removed by this area here. You can see that little dotted blue box that has now been removed by this area, and then we left. And then you ask yourself the question, well, which area removed this one? Because this was important, as was this one. So what area removed it? And you can see this one did just here. Our price moved off this area of supply. We came down, we formed an area of supply. We bounced off this area, which is the one that's responsible for consuming this. Moved a little bit lower, moved sideways, and distributed for about 8 to 12 hours. I can't see on this time frame. And then we cut through it. So this is an important area. This is the area that removed the low. Okay, and so this should be on your watch list. Okay, so you can either just right-click and go trading and set alarm at that price point. But this is an important area to watch for the reasons that we discussed a second ago. Most importantly, we traded below this important low from this point here. Okay, so when price leaves like that, you want to watch where price has returned to historically. And you can see that price tried to move up to the area once, twice, and it failed. And so what you'll be doing is you'll be marking these off like so, because this becomes the beginning of the sell zone. Okay, so price poked in, fell, we poked in, we fell, we went up, we moved, we started to move higher. But notice as well that we have this positive variance. This is the red line just here. And this would, of course, would have been over here, roughly this price point here. It would have been located at this area when price was getting close to this area here. We didn't have anything here. We had a little bit of an approach. Where are we? Kind of around here. And price went down, went a little bit deeper. but it's not interesting to us because we're focusing on this one here. So you have to sit on your hands and you have to wait for price to move into these nice areas of supply that we can mark off. Okay, this is very important. Notice the price gets very close to this area. And when it does this, you want to be asking yourself this really important question, and that is, well, where are we in the cycle? Okay, so you have these positive and these negative cycles where price just iterates around kind of an agreed axis, which is this one, and then you're going to have deviations from the mean. We had an extremely negative deviation. We had a positive, negative, positive, negative, and positive. And these, I mean, this is kind of a snapshot of the 4-hour cycle of this currency pair. Okay, and when price moves up to the positive territory or the negative territory, like you can see here, or again the positive, or again the negative, this is telling us that we're probably reaching the end of a cycle. And this doesn't mean that this pair is going to turn around and move on for 1,000 pips. It means relative to the time frame that we're currently looking on, the cycle is temporarily coming to an end. So when price does this, or it does this, at a nice area where we can see liquidity is being distributed with strength, we can see this is a beautiful pattern here, the one responsible for moving this. So this tells us that this one has clout. We want to be paying attention to that because price moved up into this area. It started to get red at the point where we were approaching this area of supply. Okay, and again, you want to wait. There's nothing to do until price moves through and into the sell zone. The sell zone is here, so there's nothing to do. Okay, if price is here, there's nothing to do until price moves up here. We have the major trend kind of moving lower. And you can see that there's nothing to do until price moves above this dotted blue line. Okay, and this dotted blue line is essentially telling us where we have price moving back into these price levels that are considered value for traders. Okay, so price moves up, we start to move a little bit higher. We're starting to seek liquidity to do what? To drive price lower. And price does this at a point where we are approaching the positive variant here. Okay, so this is just telling us to sit on the sidelines or look for another pair until price comes up to that level. And so you could just put your alarm at that area and then wait and do nothing. And once that alarm goes off, then it means, okay, it's time to see if there is a short potential setting up. And there was, just here you can see we entered supply at a point where we had reached the end of a bull cycle relative to the 4-hour chart. Okay, so this is pretty much how I'm using the histogram when I'm trying to eyeball which areas of supply and demand to use, or which buy and sell zones to interact with. It's just a really good way to force us to sit on our hands and wait for something important to happen. Okay, and this is going on, obviously, relative to the different time frames. If we go to, let's have a look at the euro American dollar. Okay, so we have, what else do we have? Let's go to the daily chart and see what's cooking. So we have, okay, so if we look at this, we have this area just here, this is an area of supply. We have a white candle, which means distribution. We have the candle that left, and when this price point left, when price left there, let me get a box, we managed to move through this. That's really important. Okay, so the origin, the area of supply that removed that is this one here, because this move originated from this area here. So this one is responsible for doing it. Price went down, we went up, we kind of fed into the lows of this area, and then we left. So the beginning, rather, the area of supply that is responsible for doing it is this one here. Okay, the candle that left is this one. The high of that candle is here, so we'll mark off that candle. And the sell zone is here, right there. This is the sell zone. This here is the area of supply at the origin. This is the origin of this move. This is the area of supply that removed this demand. So here we have the origin, here we have the area responsible. And notice here that the sell zone is actually almost at the edge of the buy zone. And in a situation like that, you'd have to ask yourself the question, I mean, how many pancakes do we have on that plate? And you can see that there's probably aren't a lot of pancakes left. So you could consider to remove this, the lower one, because this is essentially a child testing the parent, and you can focus on the beginning of the sell zone, which is here for this one. But if you look up here, we have a wick a little bit higher, and so here we have the parent supply, we have the pullback. Here we have the slingshot, price went up and then we left. So this would be the area that we could look to sell at. Okay, what do you do now? Well, you have to be really patient. You have to wait for quite a long time, weeks, potentially months. Let's actually see how long we had. Let's say the price was here. We hadn't reached the area yet. We formed this area. And this is 2 months we'd have to wait to do anything here. You have this area marked off. You have maybe your alarm set at the bottom, so you kind of put on your alarm. Then you wait. You say, all right, I mean, when has the bull cycle ended? You can see here that the price went away. We were negative for quite a long period of time, and then we started to move north. We started to move north at about here. This is when we had, this is where we had a really nice, strong push through around here. I'm just going to move it 1 bar to the left. This is where we saw it. We poked into it. So that's telling us again, wow, okay, well, we actually have price feeding into a daily supply at an origin. That's super powerful. That's really powerful at a point when we're reaching the end of a bull cycle. And that is a beautiful convergence of factors occurring at this red dotted line here. So you mark that off, you're aware of that, and you can see here that, I mean, price poked into the area, we moved off, we opened, we went down, we went a little bit deeper, so we're starting to move the sell zone higher. And then notice that price has another push higher. And so on the smaller time frame, this is just telling us that we have currency strength, we have price divergence at supply. So you go to the 4-hour chart and you can look for the same thing to happen on the histogram. And notice here, very, very clearly, we have price moving high, which connect those highs. And if we move those lows down from here to here, I mean, what's going on? Is this continuing to move higher or is it moving lower? It's moving lower, like that. Okay, so we are actually having a price divergence at supply at a point where we have daily currency strength reaching the end of a bull cycle. What do? Well, you have to wait for price to show us that it's going to stop. And you can see that we had a 4-hour area of demand here. When price left here, we moved above these highs. We moved through it, we tested it, we went through it. Price finally held and cut away. This area of supply with the white candle is the one that caused price to move away. So this is where we would sell at, in anticipation that price is going to continue to move lower. Okay, and so this is just, I mean, I think the really important point here that I'd really like to stress is that this way of trading is not stressful at all, because you got the alert on the daily chart, and you sit there and you think like, oh wow, price poked into that. Does that mean the price left? Well, yeah, maybe you would think, oh no, I missed out on this trade. Price poked into it to the pip, and then it moved away. But the patient guy just sits there on his hands. He's calm. He's got, as they say in Danish, he has like ice in his stomach, which means that he's a cool guy, and he can just sit and he can watch that because he knows that, yeah, price moved away, and that's the first test. So, okay, we're trying to trick people into getting engaged in the market to either buy or to sell. But notice that we did not see a huge influx of sellers at this level. Price came down. We reacted to this micro demand just here. And then we had another push higher. This is price advertising good prices for people to sell at. Price went a little bit deeper. Okay, so we adjust our sell zone from the high of this candle to the high of this candle. Price pokes up at a very nice positive variance. And then this is where price moved away from. Price left. We moved below this low here, deeper into this plate of pancakes. Slingshot was pulled back, and then we left. Okay, it's just another very clear example. Let's see if we can find another one. mean, these are obviously longer term trades, but you could also do this on the smaller time frame. It doesn't really matter what time frame you're looking at. And if we, let's have a look at a different pair. Okay, let's look at this one. Let me zoom out a little. So we have, what do we have? First of all, mark off supply and demand. Where do we have it? We have really nice demand just there. And this is nice demand because we have this. Actually, here it is. Right there. It was tested. This one tested it. We failed. We pulled back the slingshot to here. And this is where price managed to move away from and move higher. So this is where the demand is. Price went up. We came down. We tested the edge here. Price sat on this area. We moved sideways. We pushed through it. But did we trade below this yellow box from this area here? No, we didn't. We did not. We actually had to move all the way back up to this area of supply, and this is where price left from. The price came back down. We formed a sell zone. Let's mark this one off here. So this is the new area of supply. We formed a sell zone. The sell zone is right here. For this area of supply. This is the one here that you can see the software found it for us. It was formed, it was tested, price left, price went into it. So we move it higher. We have a new sell zone at supply at a point when price is looking to end the bull cycle. Okay, again, this is the half an hour chart. Price poked up to here. We moved our sell zone a little bit higher, which is good. So we know we're getting a better price. Price tests the child, more or less. Price rallies. We form, we accumulate, we push. We try to give people the idea that price is really looking to move higher, but it's not. Okay, it's not, because what is it doing? Well, you can see that we're actually slowly beginning to move higher. We're pushing higher. We have the currency strength reaching these extreme readings here. Here was when we poked through it on this candle here. So we're getting close to this positive variant at the time when price is reaching the end of this, just here. Okay, so here's just like another really nice example of that. And notice when price left here, price formed this area just here. Remove these. We form this area just here. Okay, price tested it. We went through it. The slingshot was pulled back to the supply, and then we left. And this is all happening at a point when we're reaching here. So you'd actually have to wait for price to move through this, remove these, and then leaving. Because a lot of people, again, would be thinking, ah, oh, bollocks, I missed the trade, price already left. But you have to remember, price just, it is not possible for price to leave and never look back. It always, always, always has to come back. Price has to go higher to attract sellers, and it has to move lower to attract buyers. And price just leaving like that is not attracting anybody because it's already left. So price does this. We had a huge push lower. When this candle's open and price is down here, a lot of people are thinking, bummer, I mean, I missed the trade. But the patient man or woman will just sit there waiting patiently, because this is the area where price had to go back to. We moved right up to the thicket of the supply zone here. If we just mark that off here, we have these bodied candles just here. All these four bodied candles. This is the one that closed below. So it looks like that. Okay, this is the body. Price left. We came back up. When price comes up, we're marking the edge of the sell zone. Price went a little bit deeper. We poked into this at, rather, when price was here even, sorry, when price was here, we still hadn't reached this positive variant, telling us patience. We wait for a little bit more, and you can see here that even though this candle went down, we closed in positive variant territory. That's telling us that the strength of the euro relative to the American dollar, we're still seeing euro strength, American dollar weakness, even on this candle that looks like this, even on this very, very bullish candle. But you know, this is not sustainable because we have reached positive variant territory. Okay, so this candle, oops, this candle closes, not yet. Wow, okay, here we have commitment. We have entered positive variance, going a little bit deeper, and then this is where we release from. At supply, price sells off, okay, and then price does the same thing that we saw on the other example as well. So there was 3 examples of the use of the histogram at supply and demand. I hope this helps answer your question, Mitch, and if not, let me know and I will have another look. But this is pretty much how I'm using the histogram. And another way you can use it is to set it to scan everything. Okay, so scan all periods. We want to scan all periods. We want to look from the weekly chart to the hourly chart. And I'm going to say scan all symbols. I'm just going to let this run. All right, it's done. I'm going to turn this off. It's going to set the alarms to false for these 2. Like that. And then this is what we have. This is the result of the scan. So now, disable the alarm, move this over here, and just have a look at these one by one. The Kiwi Canadian dollar. Where's the Kiwi Canadian dollar? Again, these could be false positives because I haven't downloaded historical data in a few days. But we can still look if there's anything. Kiwi Canadian dollar, let's have a look at that. Okay, so this is distribution. And so we are moving high. Okay, so we are, this looks a little bit like, this is on the hourly chart, just here. And so look, we've approached this positive variant territory. And look what happened in price. Price is just cutting lower. We have this area of supply that formed. We have lower lows. We have the lower highs and lower lows. Price is returning to this hourly supply at positive territory. What does that mean? That means that we're probably going to see a correction and price move down. And you can see this very, very clearly. We've already been being informed of it around here. I'm guessing we're probably right here. On this candle right here. Okay, so I'll put it to the left. On this green candle just here, we were entering positive variant territory. That means, okay, we're probably within the not so distant future going to begin to move lower from this price point. And you can see signs of that already. Price went up, we've had a little bit of a push high, you can see that here. Price left, we removed this little micro area of demand. This is demand because you can see it's tested once, tested twice, a little bit deeper, the buy zone moves lower, price sat on it, we moved sideways, we distributed, price went up to the highs here, and this is where we left from. Okay, price moved through that, we went a little bit deeper, we went up to the sell zone for this area of supply, just here, again, positive variant territory. So we can expect price to move away, which is exactly what happened. Let's have a look at another example. This is the pound Australian dollar. And this is on the daily chart. Let's go to the daily chart first of all. Pound American Australian dollar. Here. So this should be, this is accumulation. So this should be price being quite low, looking to move higher. You can see very clearly the same thing happening. But when I look at this, I'd still sit in my hands and I'd wait. I'd like to wait a little bit longer. Let's zoom out and see what is setting up. So we want to see price reacting at demand. And so you have to find these little areas that are attractive. So we have this area. It was tested. Here, this tested the chart. This one went through, but it didn't hold. This one went through, but it didn't hold. When price was pulled back to this price point here, this is where we moved away from. Okay, so that is telling me that we have the origin of the move. This is the absolute low kind of the area. Tested it. Price came down to this area. This is where price left from. So this is the buy zone. This is the parent. Here we have a child. Price went pretty deep into it. And this is going on at negative variance. Okay, what does that mean? That means that we're probably going to wriggle higher from around the 177.20-ish area and lower. We have a look on the weekly and see where we are relative to everything. Yeah, I mean, here you can see as well that we have this area here, which has been tested once, twice. So we have weekly demand here, which has been tested a couple of times, once a little bit deeper. So when we get to this area here, the 176, from where we are now, from where we have this line here and lower, we're probably going to experience a kind of an influx of buying. Also, we have a lot of price inefficiencies just here. Where do we have the consumption of demand at the opposing side of the market? Well, we have price moving up, sideways, moving up, sideways. Here we had a little micro area of demand that was removed by something in here. It was tested. Okay. Price had to come down to this area here to move through it. Tested it, tested the child. This one here, removed it. So we could just mark this off. These two areas like that. Parent, child. And so price will likely wriggle up to this area, but we also have this here, because this is the one that's responsible for moving this one. And so entries down here and getting out of the trade somewhere up here at the 188-ish, 188.70-ish area. Okay, and you can see that very nicely. I really like this one here. This is where price kind of came down to. We went up, pulled the slingshot back. We managed to trade above these highs. Price had a little bit of a deeper push. Okay, and this is happening at a spot where we have a daily negative variance. And so we have a high likelihood that price is going to turn around once it gets down to from this dotted yellow line here and lower. Okay, let's have a look at let's look at the Aussie Singapore. This is, sorry, the Franc Singapore. This is just on a different time frame, just so we can see these different ones. Aussie Singapore. Aussie Singapore. Here. So this is weekly. Where are we? This is weekly distribution. Very good. We're also operating in, this is daily and weekly distribution. So we're very high on both time frames. Yeah, but looking at this, I mean, there's nothing to do here. I wouldn't be very comfortable. Let me see here. Aussie distribute. Oh, it's daily. Sorry. So we have this one here. Sorry, confused. Jet lag. We're not even looking at. We're looking at this one, the Franc Singapore dollar. Franc Singapore dollar. This one here. So we're at weekly distribution. So we're very high. So we moved up here. Very high. We've got to find out where we have supply. Where do we have supply? Well, we had. Okay, so let me zoom out a little. We don't have any data. So we've got this here, price left. We form this area here. It's tested. This area destroyed it. The origin of that move that did it was this one. The sell zone is here. Close, close. This one is gone. We have not managed to trade above it. The origin of this move, that when it did it, this is where we have the supply right here. Software found it for us. And then we have just this one here. This is supply. It's tested. That means you want to look higher. We have, I'll tell you why this is a sell zone in a second. So we have distribution candle right there, white candle. This one closed below the low of the distribution candle. And so the area of supply looks like this, like that. And this is a sell zone. The high goes there. So I would wait to sell, and price comes up to the 153.30-ish area. Okay, so we have prices really high, as you can see. So we're ending this bullish cycle at supply at a very deep sell zone. Okay, so I think this would be a very interesting area to look to sell at. So you could either get in on this time frame, or you could wait for price. You could set an alarm here, go here, set alarm, and wait for price to get there, the alarm to go off, and then go and have a look at it on the smaller time frames and see what happens. And we can just do that quickly on the daily chart and just have a look at that area and see what it looks like. See if we can find some micro sell zones, and we have them here. Maybe even on the 4 hour, that would be much nicer. Then we get a lot more detail and accuracy. See if my broker has data. Fingers crossed. No, oh, they never do. Okay, so we're stuck on the daily, but that's all right. Still a lot of detail there. So we have here. So we don't have the detail, but we have the wicks. Okay, so we have price went up, we went down, we did this. This one closed above. So I should leave that on there. I'm just going to mark this off. We closed above, so there's micro demand here. Tested. This one cut through it. The origin of the area that did it is here. So this one did it, the high of this candle that left. So this is where we could look to get in, and our stop would be above this somewhere. I guess you could make this entry a little bit smaller. It's still a really big position. I mean, 315 pips. That's pretty big. But this one is the one that did it here. You could also argue, oh well, this candle closed below this one. So you could actually say, well, actually, the daily sell zone is here, and you would be right in asserting that this was the case, because this removes it to 233, so we lose 100 pips. Okay, and so I mean, this is just a nice, slightly deeper sell zone. And had we the data to look within this, we're probably going to find some really nice areas just down in here. And there's also something here. It's probably like maybe a 15-minute or a 5-minute demand zone. Price tested it, we cut through it, and so you want to be able to find what's going on up here, because this area is now gone, and price went up to something in here. So we do have a sell zone up here as well, which we can't see, unfortunately, but that's what we do have up here. And we're doing this at the end of a weekly bull cycle. So that's very interesting. Right, I'm going to leave it at that. 37 minutes, that's enough. But I hope that helps answer your question again there, Mitch. If not, let me know, and we can have a nice open discussion in the forum. But thanks again for watching. If you have any questions, please drop them in the Discord channel or in the YouTube comments below.